This conference will now be recorded.
Okay. So now, today we are going to discuss on fixed assets. What is the difference between normal asset or current asset versus fixed asset? Anyone? Any guesses? Yeah, the difference between current asset and fixed asset. Hello? Yeah, anyone please? Many people are from commerce people also there, experts
Fixed
in
assets are immovable assets, whereas any other, like it could be income from whatever the money, the profit that rolls over from previous year to this year can be considered as an asset for this year.
So I will take example like I have deposited 10 lakhs rupees as a fixed deposit in my bank. Can we consider this as a fixed asset?
No, it's
no,
current
it cannot be considered as a fixed asset.
Then what is the criteria majorly differentiate between current asset and fixed asset?
It should be there for more than 2 years at least.
So I'm depositing 5 years for this current asset, for this fixed deposit.
Which is
Yeah.
no,
Hmm.
intangible.
So you mean to say fixed deposit in my bank is intangible fixed asset? Yes, please. Anyone else? Just I want.
In a manufacturing industry, all the machines, the building, the place, the land, isn't that all considered as a fixed asset? Of course,
Yes.
there will be depreciation over a period of time, but initially, there will be fixed asset. It falls under that category.
Yes. The word is difference between current asset and fixed asset is depreciation
Oh,
or appreciation. These are these are the two words are differentiating between current asset and fixed asset. Whereas fixed deposit for 10 years, it is, of course, it is increasing, but it is not a fixed asset. The reason behind there is no depreciation. The majorly difference between current asset is fixed asset is depreciation, because in your studies, majority times in your college and education, they will speak like long-term investment, long-term, short-term, long-term. No, the main difference between current asset and fixed asset is depreciation. So just I'm giving you an example, like I have purchased four laptops purchased in the month of Jan or Feb. Now it is in my inventory and I'm selling and I'm purchasing. I'm selling and I'm purchasing. So from last February month, it is there lying in my warehouse. After 4 months, 5 months, now actually in the month of Feb, actually what I did, two laptops I taken into my finance department, my employees are using. Then the same laptop behavior is changing. Two laptops are becoming fixed assets, two laptops are inventory. And the inventory value will not be depreciated. You are going to sell with profit. Whereas the two laptops you have moved from inventory stores to your finance department, you are start utilizing, those two will be depreciated. So the difference between current asset and fixed asset is depreciation. Agree with me, everyone? Okay, I hope it is clear. So the main difference between current asset and fixed asset is depreciation will be calculated for the fixed asset, whereas current asset we will not depreciate the fixed asset. Fixed assets will be classified into two types, tangible and intangible. Intangible. Tangible means you can touch, intangible means you cannot touch. you cannot touch that one, it is intangible. Tangible assets are normal regular assets like machinery, laptops, so many lands, buildings, so many things are there. All you know that one makes many examples like tangible. Intangible assets means that is patents or license kind of thing. It is available, but it is intangible. Only one item will be appreciated. Appreciated will be only one item. It will be appreciated is land. In the entire world, the land will be keep on increasing. It will never decrease. In general, 99.99 scenarios, because the world is occupied with land and water. I think it is around 29% or 27% is land and 70%, more than 70% is water. So the land value will be continuously appreciated. So if you have fixed asset land, it will be increased. And if you have building, the building will have two instruments in this, two components. Building is a combination of land plus construction. So there are two components inside. Building means then land will be increased, land value will be appreciated, construction value will be depreciated. Construction value will be depreciated. Okay, this is about high level inputs about fixed assets. Any doubts, any clarifications required here till now? Small brief about the fixed assets. So now we need to understand about depreciation. We need to understand depreciation. Depreciation can be done in different ways in the system. Of course, there are many methods are there, but two methods are major important. One is straight line. Another one is reducing balance. One is straight line, another one is reducing balance. So why two methods are required? Why two methods are required? In India, I'm telling you, in India, we have two acts. One is Companies Act. Another one is Income Tax Act. There are two acts. One is Companies Act, another one is Income Tax Act. So to fulfill different acts, and we have two methods. So in India, we have two methods. In USA, there are 4 or 5 methods are there. So you need to do calculation in different acts. Okay, so federal, and there are many things. I'm not fully expertise. I know high level information. There are 4 to 5 different acts are there. So for that, different calculations you need to arrive and you need to update in the system. Okay, so to fulfill different acts in the companies, actually in the like in India, not only India, Asia Pacific region and Gulf region, what I understood with my implementation experience, it is two acts will be there. One is Companies Act and one is Income Tax Act. So to fulfill this one, we have layering concept. To fulfilling this one, layer concept is available. In this layer, we have current layer, we have tax layer, we have operations layer. There are 3 layers only by default available. 3 layers. This is in 2012, but in D365, they have Microsoft has increased layer 1, layer 2, layer 3, layer 4, layer 5, layer 6, and layer 7. So total 10 layers was introduced by Microsoft in D365. In 2012, these layers are not exist. To fulfill this functionality, there is one more depreciation books will be there separately. That books is deprecated. So in 2012, in D365 and 2012, the difference, one is value model, another one is depreciation books. These two are two methods in the system. This is in AX 2012. In all versions of R1, RTM, R1, R2, R3, every version it is like this. In D365, it is, there is no two forms, only books. In these books, actually in 2012, it is 3 layers are there, these 3 layers. If you want more functions apart from this 3 layer, if you want more functions, then we need to incorporate like depreciation books. We need to incorporate depreciation books. So this books is like removed or deprecated in the D365. This is not full-fledged functions. Of course, temporarily we can do it, but it will not hit to the general ledger module. Whatever you are doing this one, depreciation books, this will not be impacted on the general ledger module. This will be impacted to the general ledger modules. So that is the reason this was extended to another 7 layers, and this is removed. This functionality was removed. This functionality was removed in D365. Okay, so in D365, the name of the value model is changed from value model to books. Understood the terminologies? Any doubt in this? Okay, so visualization is a little bit complex. Let us understand in the system. I will show you. It will take actually like you are going to learn coming 3-4 days about this fixed assets. So all words are new words to your mindset. If you are if you listen earlier, that is fine. If you are not able to, I mean to say, if you are not came across this words, you need to habituate these words, all these words, fixed assets terminology. Okay. Now depreciation can be done in two methods. Depreciation can be done in two methods: straight line and reducing balance. What is the difference between these methods? Let us understand. If it is a straight line, what happens? Take the example like I have purchased a car. I have purchased a car. The car value is purchased car at the rate of 6 lakhs rupees. The life of the car is 5 years. The life of the car is 5 years. Now depreciation should be calculated. The depreciation should be calculated every year. So 6 lakhs divided by 5 equal to 1,20,000 will be depreciated every year. Understood? Every year 1,20,000 will be depreciated. So I mean to say, after completion of 1 year, the value of the fixed asset is 4,80,000. After 2 years, this is how much it will become. It is 2.4. After 4 years, it is 1.2. After 5 years, this will be 0. Understood? Are you able to follow? Any doubt in this? At least anyone are able to listen my voice or not?
Yes.
Yes, Satya, we can.
Okay.
Satya, this
Yes.
scenario, the straight line depreciation, over a period of 5 years, I see that the value of any product becomes 0.
Yes.
Does this happen in real time scenario, or it's just a hypothetical situation?
No, this is a regular scenario. This is a
Okay.
regular scenario, particularly electronic items. They may have 3 to 4 years, 5 years. All
Okay.
electronic items, laptops, mobiles, and these things, it will be 3 to 4 years, 5 years. If it is a big machinery, the life of the machinery may be 20 years or 25 years.
So using this depreciation is in practice.
Yes, exactly.
Okay. Thank you.
Okay. Welcome. So this purchasing of this car is called, you need to understand the words, acquisition. The purchasing of the car in the system, it is called acquisition. The value of the car after some time is called net book value. The value of the car, whatever you are talking in the system, it is called net book value. The words you need to understand, you need to habituate to these words. One is acquisition. Acquisition means the purchasing of the material. If you are purchasing the material, that is acquisition. And if you are getting the value net book at the end of the month or at the end of the year, whatever the value of you are calculating, that is called net book value. And you are decreasing the value, 1,20,000 is called depreciation. This is not complex. It is simply you need to understand the words. You need to remember the words. So my suggestion is this fixed asset recording session, try to repeat this, try to watch n number of times, at least 5 to 10 times. Particularly if you are not aware of these words, you need to repeat the session, you need to rewatch the session n number of times. Okay. Acquisition, depreciation, net book value. Okay. Acquisition means purchases, and you are decreasing the value periodically. That may be a monthly, that may be a quarterly, that may be yearly, whatever it may be. You need to decrease the value of the fixed asset. So that is called depreciation. And at the end of the period, some period, the value of the fixed asset, if you are verifying, that is called net book value. This is straight line method. Next, what is this reducing balance? So the same car, we are calculating based on the reducing balance. Purchased 6 years for 6 lakhs, and now the life is irrelevant here. The life is here, irrelevant here. 50% is the depreciation. Depreciation is 50%. Okay, then divided by 2, it is 3 lakhs. So after 1 year, the value of the car becomes 3 lakhs. Next year,
50% per year, is it?
yeah, 50% I'm entering.
Per year or every year?
Every year.
Every year. Okay.
Yeah, next year it will become 1.5 straight away. Next year, it is 75,000. Next year, it is 0.375. That means 37,500. Next year, zero point 1875. That means 18,750. Like this, it is keep on updating. This is straight line method. Here, sorry, this is reducing balance. So as I told you, inside here, one is Companies Act and another one is Income Tax Act. Income Tax Act is for the income, you need to provide the tax. You need to provide the you need to pay the tax amount against your income, whether it is a employee or whether it is a individual, whether you are a company, you need to pay the taxes. So Income Tax Act, they are telling like straight away you need to decrease, you can decrease the value of the fixed asset 3 lakhs. So as per the rules, Companies Act need to follow straight line. Companies Act need to follow straight line. Income Tax Act, you can follow straight line or reducing balance. Straight line or reducing balance. So government has given, I'm just telling you Indian situations. Of course, this is time to time it will be vary. You need to check with your chartered accountant. So wherever the client is implementing, the client accountants also may not know the latest changes. So government will be announced and it will be passed on to chartered accountants, and chartered accountants will give the information to the accountants, and accountants are going to share the information about the changes to consultants. You cannot know the latest changes from the government, what it is, the latest rules. So now this is my earlier experience. Income Tax Act allow you to select either straight line or reducing balance. Then 99.99 clients will use this one. If they are depreciating 3 lakhs, means they are decreasing the fixed asset straight away 50%. Suppose your company's profit is 25 lakhs. If your company is in 25 lakhs, if you enter 3 lakhs depreciation, it will become 22 lakhs. Understood? So anyone, if I'm giving option like you need to pay tax this year, you need to pay tax next year, you need to pay like tax next year, third year. So which one you will choose? Are you ready to pay tax this year or third year? Which one is the best? Sorry,
Later is this. Of course.
later this, of course. I will try to pay the tax later. Here, we are decreasing the value of the fixed asset highly in the first 3 years. That is the reason majority companies for Income Tax Act they will have reducing balance. For Companies Act, they are following. Okay. Can you please mute yourself, Manohar, if you are not speaking? Okay. So, so your wish, you can map straight line or reducing balance. So Companies Act, it is must. As per my knowledge, I'm telling you, as I told you, I'm not the ultimate decision maker. Government is pass on to chartered accountants. Chartered accountants will be pass on the information to accountants, and accountants comes to you being a finance consultant or a support consultant or implementation consultant. They will give the information clearly what they want. We are the executor only. The figures and the percentages, we are not expertise. So I'm telling you like 50%. So electronic items, as per my knowledge, it is around 60% also it will be allowed, around 60%. Okay, that percentage of the, how much percentage means, I'm not the expert in that one. You need to get the information from the accountants. Understood the calculation? Any doubt in this? Anyone?
Satya, I have one question out here. Like if I'm selecting a reducing balance, right? And I want to depreciate my fixed asset based on the shifts.
Okay. Yes. Okay, that is also available for machinery. There is one more method. It is available. One more method that the complicated scenario will discuss maybe day after tomorrow or something. Let me show you. I mean to say Monday or something. I will show you. Give me a second. Factor. That one is something. It is there. Give me a second. Fixed assets. Depreciations. Profiles. Depreciation profiles. I'm going to show you this one. If you click on this one, this is a two methods are regularly straight line and reducing balance. There is a factor also. You can use this factor as well for shifts. Okay, we'll discuss this one later. If it is India, we have, let me verify, INMF. So there is a straight line, reducing balance, manual, factor, consumption. So we can use this consumption and straight line, remaining life. There are country to country, there are many things. So first I will focus on two methods, straight line service life and reducing balance. Vanilla method, I mean to say the straight line happy path. Then we'll discuss on your whatever you are asking. I will discuss with you after 2-3 days. So okay, based on the consumption also we have consumption and factor. Fine. So to understand, I have explained theoretically, but I have not shown in the system till now. Now coming to the system first. The first step. First one is you need to create depreciation profile. The first most important in the system is depreciation profile. Let me close all these things. Let me keep one. So we have created one company, IIL. So the first one method is click new. First you need to create a straight line service life. You can select fiscal year or calendar year. Fiscal year means in our system whatever you have created, that one. Calendar year means Jan to December. Either one you can select. Okay. Usually the calculation is periodically. Period means monthly. Sorry. Straight line method I have created. Next one is reducing balance. So in your education, you may learn this one is written down. What is that in your education? This is not written down. What is the word in your BCom? You will use the word
WDV.
WDV, but that abbreviation, what is that?
Full form. Written down balance. Written down balance method. Written down value. Written down value.
Written down, or some other word also it will be there.
Diminishing balance.
Okay. Diminishing, yes. Anything? Okay. Maybe any methods. Okay, whatever it may be. But in the system, it is called reducing balance. Frankly, if I speak, I'm a non-commerce background guy. I'm a science graduate, but I have taught finance to more than 10 chartered accountants. What chartered accountants think like I'm a commerce background guy, but I'm a science background guy. I never studied debit and credit in my education, but with my experience, people think like I'm a chartered accountant. Fine, no issues. So that is the reason, if you ask me accounts terminology, I don't know. I'm a completely product expert, but not commerce graduate. Fine, no issues. So now in the system, you need to map. One is straight line, another one is reducing balance. So if it is a reducing balance, then system will ask like the percentage. So as I told you, percentages we are not expertise, but you can collect that information from the accountants. Accountants will give the information to you. What is the percentage? Okay, and then fiscal year and monthly. Usually I would prefer monthly depreciation rather than yearly depreciation, so that you will get the exact profit. The exact profit you will get if you do monthly depreciations. Okay, so I have created one is straight line. In this life, I have not mentioned 5 years life, whatever it is there, I have not mentioned. That will be mentioned in the next steps. Reducing balance means the percentage of the depreciation was selected. This is the first step. Okay, so depreciation profile we have defined. Next one is books. In 2012, this form name is called value model. It is in AX 2012. In AX 2012, the form name is, all versions of AX 2012, the form name is value model. That means you are identifying the value of the fixed asset. That is the reason it was mentioned as value model, whereas in D365 the form name is books. Let us understand. So fixed assets, depreciation, after depreciation we need to map books. So I'm creating laptop. Okay, laptops I'm creating. While creating, I want depreciation calculation. What is the method means? Straight line service life. Straight line service life. It is better to map rounding differences always. Wherever it is there, try to map rounding differences. Rounding rules. You know this one, rounding rules. Okay, and if you want, you can map the calendar. So it is better to map whatever the calendar we are using, like in the ledger form. In the ledger form, whatever the calendar we are mapping, that calendar usually will map, because it should be synced with the like financials. So general ledger, ledger setup, we know that one. What is the calendar we have configured in this IAL company? It is fiscal. So the same thing, it is better to map fiscal. This is laptop. It was created. Look at this one, layering concept I told you. Current layer, tax layer, operations layer, and there are layer 1, 2, 3, 4, 5, 6, 7, total 10 layers. Whereas in AX 2012 and the previous versions AX 2009, it will be only 3 layers. Only 3 layers. Okay. Next, I need to create tax layer. Laptop underscore tax. Depreciation, reducing balance I'm mapping, and this one should be mapped with tax layer and calendar fiscal. So one is current layer, okay, and next one is tax layer. Next one is tax layer. For this also I'm mapping depreciation. Okay, we have created. Next, this is books we need to create. We have created books. Like this, you need to create not only laptops, machinery, computers, or whatever it is there, buildings, lands, everything we need to create different books. Once books are created, then you need to create fixed asset groups. Books and groups, either one you can create. Now I'm creating groups as laptops. Okay, in this we have option called number sequences can be created based on the laptop. So I'm enabling number sequence and I'm mapping number sequence. Fixed asset group wise number sequence is possible. Fixed asset group wise, I mean to say Let me show you this one. Company IAL. Now in this continuous, save. So laptop number is LAP dash IAL LAP dash 001. Next laptop IAL dash LAP dash 002. Like this we can create. Understood? Each fixed asset group wise number sequence. Whereas in customer group and vendor group it is not possible. There is some workaround solution that was discussed later. So this is available in AX 2009 and AX 2012. If you are creating laptop, it will create LAP 001, LAP 002, LAP 003. If you are creating buildings, BLD 001, BLD 002. I want like this. Yes, we can map. Let me create new group.
Breakfast order cheppu. Breakfast order cheppu. మీ ఇద్దరికే చెప్పేసి
Okay, so we have created two groups. One is laptops, one is buildings. Next one is books after books. Another one is fixed asset groups. Fixed asset groups. Once it is created in the laptops, if you go to books, laptops, you can map books. In this, one is current layer, laptop. If it is a current layer, what is the life? 5 years. If I enter 5 here, automatically 60 will be updated. It will be updated 50, 60. It means 5 multiplied to 12, it is months, it is years. That's it. Next one is books, another book, tax layer. Tax layer automatically was populated. For this, you need not to mention the percentage, the life, it is not required because the percentage is already entered, that was updated here. So now once it is fixed asset is groups is created, map the books. One is current and next one is tax, etc. If it is USA, you need to map 4 to 5 different books because they have 452 different calculations. Okay, so for the buildings also I need to do like this. I have not created for buildings, I have not created books. Let me create books. Okay, give me a minute. I will be back in 1 minute, please. Okay, what is this message? We'll discuss tomorrow. What is the message? What it is coming? The reporting also must be updated in the fixed asset books. Depreciation, something it is there. Add reporting currency amounts to the fixed asset books. What is this meaning? We'll discuss tomorrow. I will discuss definitely. Now, depreciation books. The books I have created only laptops. Let me create for buildings as well. So calculate that here and map straight line and map the calendar fiscal. And here, as I told you, always the best practice rounding depreciation 1. Next, building tax. So if it is a building tax, that is imbalance. So the setups only you need to understand very clearly. You should not miss this one. That is imbalance. As I told you, for Income Tax Act in general, it is tax layer is that is imbalance and fiscal. And depreciation person like rounding rules 0.1. Understood till now? 3 forms we learned. One is depreciation profile and books we have created and fixed asset groups we have created and that was mapped in the like groups will be mapped, like books are mapped in the groups. So buildings I have not mapped, so let me map that buildings. For buildings, the group, in the group we have not attached a group books. Building, then usually it will be minimum to minimum 20 years. any small construction also, it will have at least 20 years, maybe 50 years. Nowadays, if it is high rises, it is 50 to 100 years. The life of the asset is 50 to 100 years. So if it is tax, it is mapped. This is not required. Let me delete. Understood this one till now? Any doubt? Anyone? Next. So it is, I hope it is clear to everyone. Now the books, I'm coming back to once again. The books. Whenever I'm purchasing in the current layer, whenever I'm posting, I want to post tax layer as well. Acquisition and the disposal of sale and disposal of depreciation. I'm adding some more information now. Disposal of sale and disposal of scrap. Let us understand this one. Little bit tricky, but it is not a complex. But I did it here. Whenever I'm posting in the current layer, post in the tax layer also the fixed asset acquisition. Acquisition means at the time of purchase, whenever you are posting in the current layer, post in the tax layer also. I'm telling the information. And in the same manner, whenever you are selling the item, automatically sell that item in the tax layer also. This is the design of the application. If it is 2012, you will find one more derived books depreciations. Derived books depreciations, another books. As I told you, depreciation books is another form. It is there in 2012. That will be added in the in 2012. If you go to value model, one more form will be there. Now it is it was removed functionality. So what I'm doing, whenever you are purchasing a laptop, the value is suppose 50,000 rupees. That amount should be updated in the tax layer as well automatically. That is the configuration. If you post in the current layer, post in the tax layer as well. That is acquisition, disposal of sale, disposal of scrap. So let me explain these two words. So we understood acquisition, we understood depreciation, we understood net book value. Now new terms, two more terms I'm introducing. Disposal of sale and disposal of scrap. Disposal of sale and disposal of scrap. Disposal of sales means it is selling the item. Disposal of scrap means you are putting in the dustbin. You are throwing this one in the dustbin. That is the difference. Disposal of sale and disposal of scrap. Okay, so here the setups are whenever you are purchasing laptop in the current layer, update in the tax layer. Whenever you are selling an item, in the current layer, post in the tax layer also. Like that, disposal of sale, disposal of scrap I have mapped. The same manner for buildings also, For building also, we need to map building tax, acquisition, building tax, disposal of sale, little bit tricky, but it is simple, not complex. So current layer, whenever it is posting, it will post to the tax layers also. That's it. And disposal of scrap. Understood? Any doubt in this? So two more new words to your mindset. Disposal of sales means selling the item. Disposal of scrap means putting in the dustbin. Putting in the dustbin. So today we have understood 5 words. One is depreciation, acquisition, depreciation, net book value, disposal of sales, disposal of scrap. And there is a straight line method and reducing balance method. There are 2 methods are there. Okay, everything is important. It is valuable, very, very valuable. It is a kind of diamonds. Okay, it is a kind of diamonds. So please go through my video repeatedly for at least 3-4 times so that you can understand and you will be habituated to these words completely. Okay, if you have any doubts, I will discuss. Otherwise, I'm stopping here for today. We'll connect once again tomorrow morning, same time, 7 a.m. Okay, see you all. Bye.
Thank you.
You're welcome.